over to our speakers to introduce themselves. Jane, if you'd be kind enough to start, please.
Oh, good morning. My name is Jane King. I am Director of Communications at my firm, Ashridge Asset Managed Limited. We are a firm of financial advisors and mortgage advisors. I qualified to advise on mortgages and later life lending in 2005 and have been doing it ever since. I was around when Emma set up Women in Residential Property. I'm a massive supporter of it, and I intend to continue advising for the foreseeable future.
Thank you very much, Jane. And Sinead.
Good morning, good afternoon, everyone. Sinead Conlon from John D. Wood & Co. I work predominantly in the residential lettings market here in prime central London, but also cover Surrey and the outskirts of the country. I've been working in the industry for now coming up to 18.5 years, predominantly working in relocations, individuals and families and companies relocating their business and their employees to the UK and particularly London. Looking forward to shedding a bit of light into the residential market here in lettings this morning for you all. Thank you for having me.
Brilliant. Thank you, Sinead. And Jackie.
Hi, good afternoon, everyone. I'm Jackie Rowlands. I'm a legal director at Winkworth Sherwood Solicitors. I sit in the conveyancing, lease extension and franchisement team and do a mixture of conveyancing for high net worth individuals and property investors on all sides of the conveyancing transaction, and I also act for leaseholders and landlords in lease extensions and enfranchisement claims. And I have been in the residential property area for 18 years and looking forward to sharing my views with everyone today.
Lovely. Thank you very much, Jackie. And finally, my name is Emma Vigus. I founded WiRP. I'm a client director at Thomas Carroll Insurance Brokers, specialising in residential property, all forms of insurance and risk management, with a fairly niche focus on residential managing agents. Thank you all to all of our guests for joining us today. Thank you also to today's media, as I said, and also to our sponsors and to our chair, Rebecca Kibbe. Without the support of those people and organisations and your support, Women in Residential Property wouldn't be here. So I'm very grateful. So with no further ado, we are going to move straight into our first question. And Jane, I'm going to start with you. What are the challenges, or sorry, what are you observing at the moment in terms of activity levels as a mortgage broker?
Okay, well, I will say that we are not a volume mortgage advisory company. We only work on referrals. We don't actively seek leads. So I can only tell you it from my point of view. We've had a pretty busy start to 2026, which surprised me. I think from what I've discovered from clients is they feel that house prices have now stabilised somewhat. They think that it's still a bit of a buyer's market, although as with any industry, you know, the best is still highly sought after. So certain properties, there's still not enough supply, but on the whole, they are looking to step on the ladder. I know Emma alluded to increases in interest rates, but the increments are very small. So they still have this idea that actually interest rates are still quite stable. So we've got that mixture of stable interest rates, stable property prices, and so buyers are thinking, well, actually now's a good time to get onto the ladder. We've got quite a lot of affordable home schemes. We've now got 100% mortgages. We've got lots of things out there that are helping first-time buyers, and so by them stepping onto the ladder, it's keeping the whole of the rest of the system fluid. I'm not to say that that's not gonna, you know, stop and start through the year, but for us, for the beginning of this year, it's been particularly busy.
Jane, are you seeing any either particularly strong demand or lack of demand in terms of any particular type of home or any particular region, or are you feeling it's just relatively stable across the board?
I'm seeing a lot of people moving away from London and the southeast. I think transport links from certain places in the country. So, for instance, I didn't realise Peterborough was only an hour from London, but the house prices are 2/3 of what they are in, say, Surrey or Berkshire. Leasehold, unfortunately, is getting a particularly bad rep at the moment. Therefore, a lot of people are avoiding leasehold, maybe going to Bank of Mum and Dad for that extra bit of money so that they can actually buy freehold. So it's the normal thing. Your two, 3-bedroom semis are in demand, and your leasehold 1-bedrooms and studios flats maybe not so. But buyers are getting more and more savvy and looking to move further away from London because we have hybrid working and perceived better transport links into town.
Brilliant. Thank you, Jane. And Jackie, I know that leasehold is one of the areas that you specialise in. Are you seeing similar challenges around demand for leasehold with the work you're doing?
Well, I think the autumn budget wasn't as feared as many people expected. And so with the new mansion tax only applying to homes over 2 million, and no changes to the taxation on principal private residence, we are seeing since Christmas an increase in transactions from both sellers and buyers. So I think buyers' confidence, as James says, is improving despite kind of uncertain economic conditions. I think we're still very early on in 2026 to kind of make too many predictions, but I would say, having spoken to estate agents that we work closely with, they're reporting many sellers launching properties onto the market, and buyers are there looking and are interested. I definitely think it's a buyer's market. I think leasehold, the sale of leasehold flats is going to be challenging because of the various proposals from government in terms of leaseholders. We've had obviously the Common Hold and Leasehold Reform Bill issued last week, and generally when the government does make announcements of their leasehold reform proposals, that then has a knock-on effect on the market in terms of just slowing everything down, while everyone takes stock and goes, okay, well, when are these proposals actually going to come into force? And so we might see a slight delay in perhaps leasehold properties being bought. I think we work quite closely with the private client team. So prior to the budget, we did see a lot of inheritance tax type gifting because there were concerns that the government was actually going to make changes to what you could do in terms of lifetime gifts. But with those changes not having come into effect, although there are changes with regards to inheritance tax planning for pensions coming in April 2027, I think 2026 you might still see lots of lifetime gifts, lots of parents perhaps helping their children who are struggling to get onto the property market, particularly in London and South East, where prices remain high. So.
Thank you, Jackie. And we're going to come on to specific challenges in a minute. And one of the things I'd like to understand, Jackie, is, when you're working on a transaction, what impact does the consultation and indeed the Leasehold Freehold Reform Act have on transacting leasehold today? But we're going to come back to that in a minute. Sinead, what are you seeing at John D. Wood in terms of sort of relocations and lettings in terms of activity levels?
Thank you. That's a good question. I think we're very fortunate that we're actually part of a bigger brand, regardless of what we've seen in Panorama. Connells is one of the biggest estate agents in the country, and they do give us a large quantity of data of what they're seeing, and they are one of the biggest rental providers in the whole country. And I think we're very fortunate, John D. Wood, that we are still part of that relationship, that family, that we can still have that interaction but still be very much on our own. And I think that does help us. We are always, particularly in this department, we're always keeping our sign open for business as usual, but I think it's been very much the sign of, we're actually open. You might be fearful of what you are hearing and seeing, but there are bigger, harsher things happening in the world at the moment. I don't want to put an extra downer on it, where for London, it still is a safe transactional inheritance, or, you know, thinking about producing a different portfolio strategy, it's still a very good transaction to have. So for me, keeping the relocation sign on, you know, it's steady, but it's selective activity. The way that I tend to normally work with different varieties of individual relocating to London, and the corporate relocation market remains resilient, which is phenomenal. And I cannot thank the world enough for seeing that. Mainly with senior hires, international assignees. We are seeing returning expats. I know this might be in different ways that we're seeing it, but the wider market is subdued to that. You know, prime London market, we have to be realistic. The return to the office mandate is changing 3 to 4 days. You know, I think we have to take this into consideration. You know, international mobility is restarting post-pandemic, and the rental supply is regaining a high level of transactions. So for me, I think what we're seeing in terms of activity levels is not what type of activity, but what we can offer. The Renters' Right Act, you know, has changed the way people rent. They're looking at different options now. We'll talk a little bit later about Build to Rent, which is a £1 billion organisation which is working wonders in London. And also it's growing an actual level outside of the UK industry, but also outside of London. So it's not all doom and gloom. People are coming to London, predominantly from America, from Asia, from Australia. Our main competitors at the moment are Europe, which I'll talk about in a little bit later. But, you know, activity levels are high, and we are very open and optimistic on what we see for the future of 2026.
Brilliant. Thank you. A nice positive note to end on, and actually you've all been a little bit more positive than I was expecting, which is great. So let's keep on the positive theme. And Jackie, I'm going to come to you first on this. What opportunities are you seeing at the moment? And that could be, you know, either as a business, it could be as a team, it could be opportunities for your client base. What are your thoughts on that, Jackie?
Okay, so I think with the changes the government is planning to make to the leasehold system, which is the biggest change we've seen in our history, it presents challenges and opportunities, because effectively what's going to happen is that leaseholders are going to be responsible for managing their buildings, which they, you know, might not want to. They might not want to act as a director of that company and understand truly what is involved in managing and ensuring a building and making sure it's maintained, and cooperating with all of the other leaseholders who are their neighbours. And, you know, you'll still as neighbours get those disputes and annoyances that you have of living next door to one another. And so that presents challenges for us as legal advisors, but opportunities to kind of assist those leaseholders with those changes. For instance, you know, taking on responsibility for managing a building, they're then going to have to become and have a greater understanding of the Building Safety Act implications, which confound even us as lawyers and people within the industry dealing with those inquiries daily. So I think it's that the ability to kind of be at the forefront of those changes and to be able to help people with shifting into that new realm is exciting, and one that we're looking forward to.
So for you, Jackie, at Winkworth Sherwood, you're very much seeing this as an opportunity to provide that really specialist advice to what will become common holders potentially on something that's really incredibly complex.
Yes, exactly.
Yeah. Okay. And Jane, I know you've got a big ask later on of government in relation to this legislation, but what are you seeing as opportunities at the moment, either for Ashridge or for your client base?
I think there are two things. I think the first thing is to make use of all the affordable schemes that we have out. I mean, I don't know if you read today, Santander have bought their 98% mortgage out. We've got 100% mortgages. We've got family. chuck some money in the pot mortgages. You know, there's nobody now that couldn't with the right help get onto the ladder. But I think my main thing that struck me over the last year or so is the promotion of face-to-face advice, be it conveyancing, be it mortgage broking. We've read a lot in the press about AI and how it's going to take over our jobs, and we're all going to be out of business. But my experience is, and I always take a bit of a straw poll when I speak to somebody, because I face-to-face speak with everybody that I look after, and they don't want AI to look after their property journey, for want of a better word. They want to speak to a mortgage advisor, they want to speak to an estate agent, they want to speak to their solicitor, they want to understand the process. And I think for all of us out there that want to do face-to-face advice and are not interested in people doing on an app, I think we are ahead of the curve, because I think it's done a bit of a full circle, and where young people and even older people thought that an app or an AI bot was going to sort out their mortgage, they've turned away from that and decided that this is the one transaction in their life where they really want to be in front of human beings. So I think for those of us that can embrace that and grab that opportunity to do that, I think we're going to be okay for at least for the foreseeable future anyway. And I'm certainly not going to give up, and our office has no intention of doing anything where a transaction is assisted by AI.
I think it's a really interesting point, Jane, because actually one of the things that the various government consultations does is to highlight the complexity, not only just of different types of tenure, but also of the home moving process. And actually, the sensible person, I think, would see that as enhancing the need for really good quality personalised advice, rather than the time, as you say, to turn to the AI.
Absolutely.
Sinead, what do you see as opportunities at the moment in the market?
I love that question, because every challenge, reaps an opportunity, particularly in this industry. I think very much what my colleagues to my right have obviously outlined on their own professions is that trusted advisor, then a transactional agent. What we are seeing on our end is that they want market interpretation. They want to see a risk management profile. Am I making the right calculated risk? Am I going to get that end-to-end support, schools, communication in terms of tenancy structure? What is the Renters' Right Act? Explain to me very much I don't need to know all the legal jargon, but just give it to me in a very clear, concise way that I know that I'm going to be protected as a tenant, I'm going to be protected as a landlord. Am I going to be protected as a vendor wanting to get into the industry? We would like to place ourselves in a market where we are winning market share now, as consolidating in a professional way and becoming a differentiator. I think that's what we need to be thinking about. The Renters' Right Act, if David Smith was on this call now, it's happening. It's here. The right agents are making those opportunities now. And I think a lot of the agents that we may see face to face on a regular occurrence are making even worse by saying, well, we don't do company rentals, we don't do short-term rentals, we can't help our vendors in a sales transaction by giving alternative solutions. So we've got to be really thinking about having a structure in place. And this is what I love about Kate Faulkner and obviously the team at Roper. They're trying very hard to explain to everyone in the organisation of a state agency, this is what we can offer. Don't be afraid to offer different opportunities. So the greater the opportunities are out there if we understand our industry and take those calculated risks. So there's 3 points that we're trying to keep within John Day Wood is talent retention. I don't know if anyone on this call is seeing that. Developing experienced advisors. More complex, lower volume markets will create better estate agents. Navigating a constant regulatory, legal board, maintaining speed, accuracy, a service, compliance, and, supplying, a level of property where we will see a corporate activity always striving, rising clients' expectations, making sure that we keep these portfolios at bay, giving them the advice they need, both from a sort of insurance base, mortgage base, but also from an estate agent point of view.
Thank you, Sinead. So I think in summary, all of you really are highlighting the same opportunity, which is the increasing need for specialist advice in a really, really complex market. Let's flip that around now. And Jane, we're going to start with you on this. Challenges, biggest challenges. Oh, you're on mute, Jane.
I think one of the biggest challenges is for our buy-to-let landlords. I know that Sinead was on about big corporate landlords, but for the private individual or small limited company who are being absolutely clobbered everywhere they turn, from the rights of renters to, you know, the cost of a mortgage, to the tax, to everything. We are seeing a lot of small landlords leaving the industry. Some would argue it's good for first-time buyers because their homes tend to be the type that's snapped up by first-time buyers. So I think that's one of the biggest challenges for advisors that are trying to assist buy-to-let landlords. We also have the spectre of conditional selling, which we are trying to. I know I've spoken to Kate Faulkner about this. It's not a good thing, but it goes on. And obviously the leasehold issue still is a challenge. One of the biggest issues I see in my job is that buyers do not understand their leases. They do not read them, they do not understand them. And most of the complaints I get from leaseholders, this was before all of the, you know, the stuff that's happening now, when you ask them, do they read their lease? I can tell you 99% of them have no idea what's in it. And so that is a challenge, because you know, if anybody's going to buy a leasehold, you've got to make sure they know what they're buying. So I think there are the three biggest challenges for me at the moment.
Jane, when you deal with somebody who's buying leasehold, to what extent do you find people are proactively thinking about service charge, the possibility of that perhaps increasing if major works are needed?
Never.
Are people right? Okay.
Never. They just think, oh God, I found a lovely flat. It's got 100. I mean, we always check the number. People have sort of learn about a long lease is a good thing. They've learned that bit. But when you ask them what the service charge is, 9 times out of 10 on the agent's details, it will have ask the agent. So when you say to them, you know, so what's the service charge? What's the ground rent? I can tell you that 95% of them have no idea. All they can see is a lovely flat, which they can get their new sofa in, and can they get a dog, and, you know, blah, 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 blah. But when it comes to things like, have you read and understood your lease? No. And I think that is a big problem, because these buyers are buying property and they do not understand how it works. And this is where we're getting complaints. And it's not because there's anything necessarily wrong with the leases, it's because the buyers didn't understand them at the time that they bought the property.
Jackie, what challenges are you seeing?
I think there is a significant amount of uncertainty within the leasehold sector. And I think with the government's focus is a little, in my view, to spread too widely with their various reform proposals, because we've got obviously the proposals to reform leasehold enfranchisement rights under the Leasehold and Reform Act 2024. You've got the announcement on the cap to ground rents in existing leases, which were announced last week, and I think the government hopes for that to come into effect in 2028. But obviously it's subject to further legislation. And then you've got the Common Hold and Leasehold Reform Bill, which is a lengthy bill, I think about 363 pages. So that's going to take some time to go through. I think it's been almost 2 years since the Leasehold Reform Act was introduced, and many of the provisions are still not yet enforced. And so leaseholders are left in a difficult position as to, you know, if they do need to think about a lease extension, seriously consider thinking about it. Do they go for it now under the existing legislation, or do they wait to see if they can benefit from the new proposals, with, you know, one of those being your lease extension? Instead of 90 years as under the current legislation, you'd be entitled to a 990-year lease extension. And often what we're finding is leaseholders come to us and ask those questions, and it's not an easy answer to give, and it's not. It ultimately comes down to whether they're prepared to wait or not. Obviously, as they approach kind of 80 years, then it may be sensible actually for them to see if they could benefit from getting a lease extension perhaps cheaper under the new proposals, but there's just no guarantee at the moment, and I think that's causing lots of issues within the market. And I think often what happens is just as we see a flurry of instructions where leaseholders have said, okay, enough is enough, I'm actually going to get on and make my lease extension claim, we then have an announcement from the government like we did last week. And in our experience, that just means that some of those leaseholders who are on the fence will probably now hold off for a while. So it just kind of stagnates the market a bit. And so I think that's kind of our real challenges at the moment, just where there's lots of uncertainty still in the sector.
And Jackie, picking up on Jane's point about, the need for a greater understanding by purchasers, people who are already in leasehold, how easy or hard do you find it to explain to people what leasehold is and what it means for them as somebody, for example, who's thinking about buying a flat?
I think it depends on what type of buyer you're dealing with. Are you dealing with an experienced buyer who is used to leasehold flats, or are you dealing with somebody this is a first time buyer? I acted for a client last year, or actually the year before, where he wanted to buy a leasehold flat, and then when we explained what that meant, that there were service charges and what they were, and that there was planned alterations or planned works to the property, and that would increase the amount of service charges that would be payable, and that there was a ground rent, he pulled out of that flat, and because he was nervous about it, and then he went to buy another flat and pulled out of that one for similar reasons, and then went to buy a third one, to the point where we said, are you sure you want to buy a leasehold flat? Would you not be best off buying freehold? He actually ended up buying a Victorian terrace that was converted into 2 flats with a share of freehold, and I think that was a better a fit for him. But it took a long time to really make him understand what it truly means to buy a leasehold property, and not everyone understands it. So yes, we have lots of conversations with clients over the phone. We'll then follow it up in written advice, and we have in our reports that we do, we have kind of very clear summary of every important provision in the lease. So things like, if they've got a pet, can they actually have a pet, or would they need consent for that? And even carpets, that's a big issue because everyone likes wood flooring in flats, but that causes noise issues. So we go through it, all of those in detail.
Sinead, challenges.
I think going back to what Jane was saying at the beginning about the smaller, landlords that have a small portfolio of build to rent, buy to rent, I beg your pardon. I think we've got to be very, very honest. We've been very lucky to have these individuals in our industry. I think we've had them for a little bit longer than we anticipated. Some of them have been accidental landlords. Some have used the inheritance tax that they feel that was a best solution for them. Obviously, one of our future speakers talking about pensions, thinking about a long-term game plan. So I think we always knew that we wouldn't have these types of individuals in our armory for forever. I think we were hoping for the best, but aiming for the worst. So I think we have to be realistic. If our future in the rental market are larger landlords who can afford the market, then we have to obviously make a game plan for that. So these professional landlords are using the market that we're in right now. They are seeing that these prices are coming on in a market where they would never ever got these types of prices, and they are taking them like that. And I think these are the ones that, unfortunately, they're gonna buy quickly. They're going to be, quick buyers. They're gonna be like, let's get my card ready, and they're going to need that advice fairly quickly. And I think they're the ones that'll be like, well, give me 15% of your portfolio. We'll have a corporate strategy in place to understand if you are looking to then buy land, you know, and think about planning within the sort of the inner or outer circles of London. Let's think about a strategic plan. So knowing what the council will give you in terms of planning consent. So for us, it's no longer just thinking one end user to another. We've got to think long term now. And I think working with the planning teams within the council, and I think the council have been very nervous of working with estate agents before, because it's been a very, you know, end, you know, oh, don't talk to me, we're the baddies. It's like, no, we work in the same industry. So if they see that we're trying to work together, it's going to cause a better outcome than more challenges in the market. So, and I think this is what we're seeing at the moment from our corporate side, that corporate tenants value stability and complexity in a smaller way, in terms of, obviously, give it to me in a sort of a good compliance sort of way. And, you know, and premium agencies are starting to stand out for all the right reasons now. And, you know, a fully managed compliant rental service that will take my portfolio will more likely keep them as an investor for the next 5-10 years. And this is why a lot of long-standing estate agents have left the corporate industry to start their own businesses and work in the self-employed model, which I also think is something we need to talk about on this role here, because we are all part of a corporate world, but some of us may be doing this on our own and might be under the banner of corporate. You know, we need to start thinking about that as well. Just because you're doing it on your own doesn't mean you can't do it the same as someone who's working in a corporate setting. But I think it goes back to our original point, you know, thinking about long-term growth. We can't just think about changing the smaller things now. We've got to take these opportunities and grow them now. And that's when most of our clients are going to come back to us, because you helped me back in 2026. The Renters' Right Act, it was a burden, but it's not a burden anymore, because you've given me alternative solutions to the problem. You know, the government are always going to want short-term solutions to a longer-term gain, but it's our job is to advise the government of what is working and showing the market that we're still open for business and we can still actively trade together without being an added burden to anyone's price pockets or their future inheritance for their children. So I think for us, it's just about long-term expansion now. The people who are staying in the industry, making sure they make the right decisions, focusing on where they can buy in the right areas that are going to expand in the next 2 years.
Jane, just picking up on Sinead's point there about sort of consolidation by slightly larger residential investors, are you seeing that in terms of your client base? So you've got perhaps the people who'd become an accidental rental landlord selling up, and actually those properties being acquired by people who've in a position perhaps to hold a portfolio of residential property. Sorry, Jane, you're on mute.
I'm seeing quite a clear division. I have landlords who have set up limited companies, decided they're in it for the 20-year haul, regularly look at, do we want capital growth or do we want yield? There's not a lot of capital growth around at the moment, especially in London and the southeast. However, they are moving to other parts of the country, university towns, places like Manchester, Liverpool, and they're thinking to themselves, well, I'm going to forego the capital growth for the time being, and I'm going to look to the yield. And they've got, as I say, 10, 20-year plan, build up slowly. They know exactly what they're doing. And then we have the other side of the coin, where we've got the landlord with maybe 1 or 2 properties, thought they could flip it in a couple of years, realised they can't, not sure what to do. You look at their tax return and they're not making anything particular out of it. And they're not divvying, but they're not adding to their portfolio, but they're not selling either. So they're pretty undecided about what to do. So as I say, we've either got the limited company, 20-year plan, know what I'm doing, know where I'm going, and we've got the ditherers on the other side that maybe I will, maybe I won't, sort of. But a lot of the accidental landlords that have inherited houses or maybe moved in with partners and rented theirs out, they're packing it in. I think because we work within an IFA practice, our wealth advisors here have said, well, look, you can sell up, stick the money in your ISAs and your pension. You could probably make more money by doing that. Put your feet up, and you're not going to get a tenant ringing you up at 3 o'clock in the morning because you've got a leaking tap or something. And I think a lot of accidental landlords that don't want to do it themselves are just saying, well, do you know what? That's it for me. I'll use the money for different type of asset class and then end up with the same objective at the end of it.
Yeah, that's
Yeah.
certainly the advice I followed, having sold my accidental rental property about a year ago, and I'm very, very pleased I did.
You're not the only one.
But on the flip side, I just want to say on that point there, sorry for interrupting you both. It says it's amazing to see now when we actually look at the data who those accidental landlords are, the ones that maybe have between 3 or 5 or 5+. It's still only a small proportion of what we're seeing from John D. Wood that are still there. It was only less than 5% within our network. So I think it's that third, isn't it? The ones we have to really, and I think this kind of comes back to maybe the likes of AI. We've had that in-person conversation. We've had that in-person relationship for years, but maybe AI is starting to sell the positives of the rental market, because I think we've got to be very, very careful. We all have our own viewpoints and we say it very, very openly with the best of intention, but our biggest opportunity, is to convert the media. The media is so heavy at the moment to take the negative approach, create a scandal, create, animosity in the market, where we are trying to keep the foundations together and keep a better direction point. So we all want to keep the sales market afloat, but rentals, remember, the rentals is the neck of the industry, sales is the head, and the people working in it is the body. So I think at the moment now there has to be a way of us coming together, because at the moment now the sales market is going to get better, but it's not there yet, and it still needs an active rental market to keep it afloat and to keep it strong. So I think we have to come to some sort of solutions, I beg your pardon, to keep this afloat.
I think that's the media, Sinead, and the importance of the media having a far, far better understanding of the residential property industry is vital. When I hear a Radio 4 presenter getting ground rent muddled up with service charge, and repeated articles where clearly the understanding of various aspects of residential property is very, very poor, that has to be addressed. And I think that's a huge opportunity for collaboration across the industry, and a chance for us to actually really stand up and represent ourselves collectively and accurately. And moving on from that, first of all, just a quick reminder for our audience, please do take the opportunity to complete the polls. Over time, they're going to build up to form a really important measure of how we're all feeling about the industry that we're working in. Secondly, I am moving on to our final question. So if any of our audience would like to raise a question or a discussion point, please add that to the chat. I can see we've got a couple in. But finally, our last question, and Jane, I'm going to go to you on this because I already know what your response is. Your one ask, and this could be an ask of government, it could be an ask of a different part of the industry, it could be an ask of a prop tech supplier. What's your one ask, Jane?
My one big ask is to the government, and it's, can you please bloody well sort out leasehold? Finished. That's it. That's all I've got to say. That's all I need to say on the subject. Sort it out.
Jackie, might be the same.
Well, my ask is also to the government, but it's actually to talk to key professionals working within our industry so that they can get a real understanding of what their proposals, the impact those proposals are going to have in practice for all of us dealing with, and advising every person who is in this industry. And I think also, kind of building on Jane's point, is to then give some clarity and certainty on when these leasehold proposals are actually going to come into effect. I think that's leaseholders and freeholders just can't make informed decisions until they know what rights they're going to have in the future.
I think, Jackie, that point about people who are driving for change, understanding the impact of those changes right across the sector is absolutely vital. We're repeating a discussion similar to this at the London Leasehold Roadshow in about 4 or 5 weeks. And I've just written the scene set for that. And the point that you've made, Jackie, is one that I highlight very, very significantly. It might make something easier for one part of the industry. There's no point in doing it if it makes it much more complicated for another part. Sinead, your ask.
Again, I think we're sticking to the 3 Gs, government. I've got to say, Lord Best has been an absolute champion for us. And this is going back to what Chaki's asked for. We have someone within our organisation, our industry, giving valid information to the government, but they're just simply not listening. They are adamant they want to keep their policies in place. And after the last Lettings Industry Council meeting, which took place in January last month, we had members of the housing sector or the housing department at that particular meeting. And they are just blinded that the information that they are obtaining is inaccurate. Again, it comes back to the main specific points that we're seeing at the moment now, is take a greater awareness of what the industry standards should be, what they can be, but what we are pursuing to be a future plan is not being heard by the government, and legitimate sort of points of what we can all establish to get to together would be a better understanding for us to have greater change in the industry. Because what we all want, we want better regulations on our landlords, we want better regulations from our estate agents to have a better traction place there. But at the moment now, the government are on one traction alone. They want to make as much money as possible, and using the residential sector is not going to be where they make their next billion.
Lots of commonality between actually all of your responses to many of these questions. And I think that really underlines the importance of collaboration, but also the fact that actually very often when you do bring people together, our views are not greatly dissimilar. On to some of the audience questions now. We've got quite a lot coming in, so forgive me, audience, if we don't get through all of these. I'm going to start with Megan Jenkins. Lovely. Welcome back to Women in Residential Property. Megan, I hope you're well. It's been far too long since we've seen each other. Megan asks, are you seeing much impact of Building Safety Act and safety issues stopping or delaying leasehold sales? Jackie, can I come to you on that to start with, please?
Yeah, I mean, the Building Safety Act is still a major impact in any decision in selling and buying. Interestingly, I had a client that I acted on a purchase of a freehold property for her a number of years ago, and she contacted me last week because she finally sold her flat that she was prevented from selling for quite some time because of Building Safety Act issues. This was a share of freehold, so they didn't have the fallback of a third party landlord or developer to go to undertake the remedial works. And it just goes to show that it still has a huge impact on the market. So yes, I have lots of buyers that will pull out because of Building Safety Act concerns. It's still a major issue and a stumbling block for for sellers to sell their properties.
Jane, anything that you're seeing on that?
Yes, it's been an absolute nightmare for buyers, especially people that bought into shared ownership with it, not just the shared ownership purchases, but within blocks where housing associations have had to take some responsibility for getting the cladding and all the, there's been balconies that have had to be replaced, new build developments that have had to suddenly stop, going to market because various things need replacing. And these people feel very powerless to do anything because they want to sell. You might have, a couple with 2 children in a 1-bedroom flat who are just stuck where they are because not only are they trying to get landlords and freeholders, but they've got the housing association added to the mix. And, do they pay for it? Don't they pay for it? 1 minute they're told one thing, next minute they're told something else. And they're stuck. And I think it's that feeling of powerlessness. And also it can break a chain. You've got you've got a chain of people, and then suddenly the solicitor or the lender says, well, there's no EWS1 or whatever it happens to be, and the whole chain's collapsed. So I think it's been a terrible thing. I feel so sorry for people that own these properties. And as soon as they get, as soon as they can get this done, the better, as far as I'm concerned.
Sarah Hines has made a really interesting point about basically we're lacking a sort of leaseholder for dummies guide. And Sarah, thank you for highlighting TPI guidance. I think there's various organisations who publish guidance. Jane, I'm going to come back to you on this. Do you, and we've talked a little bit about how people respond to the information that you give them when they're buying leasehold. Do you think people take enough notice of the information they're given, or are they, so set on moving their sofa in that actually they don't mind if the service charge is going to go up and up and up, or the roof needs repairing?
Well, I don't think they even realise that service charges are going to go up. A lot of them don't even know about ground rent. I for one hate any form of regulation, but I think it should be mandatory for everyone that buys a leasehold property to be given a copy of their lease. And I think probably the solicitor is the best person to go through a lease. And the problem is a lot of these pilot high, sell it cheap legal conveyancing firms do not bother, whereas the more specialist, more bespoke firms are quite happy to, ring up their client and say, we've got a copy of your lease, would you like to go through it? And I think it should, I hate regulation, but I think it should be mandatory that a buyer of a leasehold property is made to read their lease and understand what it means. I've had clients come to me and say, oh, well, there's 50 years left on the lease. Is that all right? They don't even know what it means. So you say to them, well, what happens at the end of 50 years? What do you think? Oh, I don't know. And, have you looked at, the cost of an extension? Well, what's that? These are such common occurrences when you buy a leasehold that I think, and I always say to my clients, get a copy of your lease, read it. If you don't understand it, ask me or ask your conveyancer, because this is the whole basis on which your transaction is based, and you're making a huge commitment over maybe a 25-year term. For goodness sake, understand what you're buying.
And you do have to wonder how they're going to understand common hold, don't you? But hey, Sinead, quick question for you now. EPCs, and I'm asking this because I'm conscious probably with your portfolio, I'm guessing you've got some beautiful London mansion blocks with appalling EPCs, but God, we'd still love to live in them.
Yes.
What impact is it having, Sinead, on letting property and on your landlords? And are you seeing landlords making use of sort of green initiatives to improve the energy efficiency? And actually, is that even viable if it's leasehold?
Yep, no, that's a very, very good question. I think going back to what Jane said at the beginning, making full use of every opportunity that you have to get free money. I think we saw a lot of that back in 2022, 2023, when there were a lot of bursaries in place from your local council, the sun windows, we used to love to call them, on your roofs. Again, it comes back to your agreements. If you put them on your roof, the next owner will have to keep them. Simple things like that. People, just say, oh, just add it in now and think about it later. I think we've seen a lot of our landlords do as much work as they possibly can, and I think they get a little bit frustrated when they've spent on our recommendations tens of thousands of pounds and it's only gone up by one digit. And I think what our landlords, and this is what we're encouraging them, is that you're actively trying to keep your portfolio, if it's one or multiple, to a good high standard, even if it is just one. The council need to show that there is a trend in accountability, and it will always go to the individual owner. And again, it comes down to the communal areas as well. So I think the fact that us working together, particularly on communal areas within the building, going into the house itself, if you can obviously add in a secondary glazed window, it will benefit the clients there in the future. It may not be where you want to be now, but I think the Renters' Right Act is going to create some sort of an active urgency, and when people are being asked to pay a certain amount, when we put it on for the right price at the beginning, will be obviously contributes there when it comes to EPC. We are seeing quite a lot of our owners that do have grade 1, grade 2 listed houses and apartments, particularly the likes of South Kensington, going into Earls Court, Brenham Gardens. They've done everything they possibly can, and a lot of people are prepared to do it, because I think it was something that came out in the Financial Times. There's only 250 residential grade 1, grade 2 listed houses or apartments left in the United Kingdom. which you can rent out to use if the owner has decided to do that. So you are living in something of a bit of history there. You're not just living in a sort of a modern duplex, which some people do not want. They still want, I'm living in a red brick house or a red brick building. I want that facade. So people that want that will rent it. People who can show that we've done the work, we've done the work. So that, again, there's always going to be a challenge with that, but we just manage it effectively with a good property management service.
Thank you, Sinead. Jane, very quickly, what are you seeing in terms of the availability of funding from mortgage lenders to improve the energy efficiency of homes, whether that be a home that's going to be let out or a home that's owner occupied?
Well, of course, we do have green mortgages, which are not really worth the paper they're written on. You might get a small drop in interest rate, or you might get £250 cash back if you're really, really lucky. But that's about it. Obviously, you can take out additional further advances for home improvements. And I think Virgin Money still do a large home improvement further advances with significant cashback. But to be honest, my impression that I get from speaking to lenders is they're not really into it. They're quite happy if you've got solar panels on your roof, but you're certainly not going to get a discount on your interest rate for the privilege. So no, couple of £100 maybe in your back pocket at the end of your remortgage, but that's about your lot.
And it'll be interesting to see as well how bitten we all are by whatever comes out of the incorrect fitting of damp proofing work, etc., and the causes of mould. I think that's a big issue that we should all be keeping an eye on, particularly, and I'm going to say this because I work in insurance from a professional indemnity insurance point of view going forwards. We have come to the end of today's discussion. Thank you very, very much to everybody for joining us. I'm sorry if we haven't been able to address all the points. Angela Hesketh, the response to the Common Hold consultation, I think there are various organisations responding to that. I know we'll certainly be putting in a response to the Property Institute, specifically in relation to insurance. But I think also Kate, Faulkner and Beth are obviously going to do a response on behalf of the Home Buying and Selling Council as well. Something I would say, I think some of you will be aware of the very sad situation with PM property lawyers. If anybody in this group wants any support or needs to talk to somebody or reach out, do get in touch with us and we'll do our best to provide whatever help we can. I know that David Opie from Today's Media has put out a similar message as well. Very, very sad, obviously, to see impact on jobs, etc., from that firm closure. Thank you very, very much to everybody who's joined us today. Fantastic. Thank you to our brilliant panelists. It's not easy doing these discussions. I still find it quite hard doing a webinar, so I'm really grateful to all of you for your time and for the fantastic insight you've shared. Do have a look on our website, everybody, for the next events we've got coming up. Women in Resi Property Coffee Morning next Thursday. Always a lovely event, completely free of charge, totally disorganised, slightly chaotic, but we usually end up discussing some important stuff. I will very much look forward to seeing you there, and thank you very much and have a fantastic rest of the day, everybody. Cheers. Take care.